What if I told you the richest person in the world might not actually have trillions of dollars sitting in a bank account? Sounds impossible, right? Millions of people believe Elon Musk's wealth means he owns endless piles of cash. But the truth is much more surprising. Today, we're uncovering how billionaire wealth really works, why most of it exists only on paper, and whether the world's biggest fortune is actually as real as it looks. When people hear that Elon Musk is worth hundreds of billions, or even imagine $1 trillion, they picture something like this. Endless stacks of cash, giant vaults filled with gold, and unlimited money ready to spend. But that's not how billionaire wealth actually works. Most of Elon Musk's fortune isn't cash at all. Instead, it comes from owning shares in companies like Tesla and SpaceX. These shares represent ownership, not money sitting in a checking account. Their value depends on what investors believe those companies are worth. This is called paper wealth. Imagine you own a house. If its market price doubles, you become richer on paper, even if you never sell it. Company shares work the same way. As stock prices rise, the owner's net worth also rises. But why do these shares become so valuable? Because millions of investors believe the companies will earn even more in the future. Expectations, confidence, and market psychology all influence stock prices, not just today's profits. The opposite is also true. If investors lose confidence and stock prices fall, billions of dollars in paper wealth can disappear almost overnight. The owner hasn't spent any money, it's simply vanished because the market changed its opinion. Here's the biggest misconception. Owning shares doesn't mean you can instantly spend that amount like cash. Selling huge amounts of stock can lower the share price, attract taxes, and even shake investor confidence. That's why a billionaire's net worth is very different from the money they can actually spend today. You might be wondering, if Elon owns so many valuable shares, why doesn't he simply sell them? The answer is that selling a large amount of stock isn't as easy as it sounds. It can push the stock price down, reduce the value of the remaining shares, and create a huge tax bill. For many billionaires, selling is often the last option. Instead of selling, many wealthy people can borrow money using their company shares as collateral. Think of it like using a house to secure a mortgage. They receive cash from the bank while still keeping ownership of their investments. This idea is often described as buy, borrow, die. First, buy valuable assets. Second, borrow against them instead of selling. Finally, when those assets are passed to heirs, tax rules in some countries may reduce taxes on the unrealized gains. It's a strategy often discussed in finance, though the details depend on each person's situation and local tax laws. Why would a bank lend billions of dollars? Because valuable shares can serve as security. If the borrower fails to repay the loan, the bank may have rights over the pledged assets. From the bank's perspective, lending to someone with extremely valuable holdings can be less risky than it first appears. But borrowing against shares also comes with serious risks. If the value of those shares falls too much, the lender may demand more collateral or repayment. This is called a margin call. Even the world's richest people aren't completely protected from market crashes. So, is Elon Musk's fortune fake? Not exactly. Is it all cash? Definitely not. Much of it depends on company valuations and investor confidence. Supporters argue this wealth reflects innovation and long-term value creation. Critics say it highlights loopholes, unequal taxation, and the growing gap between billionaires and ordinary people. In the next part, we'll explore how politics, taxes, Wall Street, and public perception shape one of the most controversial fortunes in modern history. One reason Tesla became so valuable is that many investors don't see it as just another car company. They believe it's also an artificial intelligence, robotics, battery, and energy company. Those expectations have helped push its market value much higher than many traditional automakers. Stock markets don't only reward what a company earns today. They also price in what investors believe it could earn years from now. If millions of investors expect enormous future growth, the company's valuation can rise far beyond its current profits. Another major part of Musk's wealth comes from SpaceX. Unlike Tesla, SpaceX is privately owned, meaning its shares aren't freely traded on public stock markets. Its estimated value comes from private investment rounds, where investors agree on what they believe the company is worth.
Company valuations are heavily influenced by confidence. When investors strongly believe in a company's future, they are often willing to pay higher prices for ownership. That growing demand can dramatically increase the estimated wealth of major shareholders.
Supporters argue that companies like Tesla and SpaceX have accelerated electric vehicles, reusable rockets, and technological innovation. Critics respond that extremely high valuations can increase wealth inequality and may not always reflect economic reality. Both perspectives continue to shape the public debate. Media coverage also plays a powerful role. Positive stories can strengthen investor confidence, while negative news can create uncertainty. In today's world, public perception, financial markets, and social media often influence one another, making the story of billionaire wealth even more complex. One of the biggest debates is taxes. In many countries, people generally pay taxes on income or when they sell investments and realize a profit. Simply owning shares that increase in value usually doesn't create a tax bill by itself. Critics argue this allows extremely wealthy investors to see their fortunes grow for years before taxes become due, while supporters say taxing unrealized gains would be difficult and could create new problems. Successful business leaders often interact with governments because regulations, taxes, infrastructure, and contracts can affect their companies. Supporters see this as a normal part of running major businesses. Critics worry that wealthy individuals may gain greater political influence than ordinary citizens. The right balance continues to be widely debated. Why does any of this matter? Because decisions about taxes, investment, innovation, and wealth can influence governments, businesses, jobs, and public services. The discussion isn't just about one billionaire, it's about how modern financial systems affect millions of people. Perhaps the biggest misunderstanding is confusing net worth with cash. Net worth is an estimate of what someone's assets are worth at current market prices. Cash is money immediately available to spend. Those are two very different things, and understanding that difference changes how we view billionaire fortunes. So the real question isn't whether Elon Musk's wealth exists. It does, but largely as ownership in valuable companies whose market value changes over time. The bigger question is whether today's financial system rewards innovation fairly, or whether it concentrates too much wealth in too few hands. That's a debate that continues around the world. Elon Musk's fortune is one of the most fascinating stories in modern finance. It's a mix of innovation, investor confidence, company ownership, market psychology, opportunity, and controversy. Understanding the difference between paper wealth and cash helps us look beyond the headlines and better understand how the financial world really works. What do you think? Should billionaire wealth be taxed differently, or is the current system the right way to encourage innovation? Share your thoughts in the comments. If you enjoyed this video, don't forget to like, subscribe, and I'll see you in the next one.